Hi guys, welcome back to my channel. Okay, I've been away for 2 weeks, not because I don't want to create a video. I'm actually really running out of content. I don't know what to do. So basically, yes, and I have been tested positive on COVID for the past 8 days. So I was diagnosed positive on the 19th. So I was stuck at home for 7 days. So basically, what I'm doing now is I'm out. I'm doing my introduction out in the public because I have been staying enough of home time. What I'm going to talk about today is the stock market. You know, my Baba shares, my Tesla, my Palantir, my Apple. Very weird. You know, it's just like menses, coming, just keep coming. Of course, menses will end, after 1 week. So hopefully this thing ends very soon as well. So coming up next, some analysis for your information. I'm pulling out this chart from Yahoo Finance. This is generally what the whole market is for the 1 year. So we have this lines that probably can look a bit of intriguing to you. So I've listed them out. They actually consist of the S&P 500, the Dow, and also the Nasdaq. Basically, you don't really need to know what are these. If you want to know, of course, you can read further on these informations. And from what we see on the 1 year chart, you see from 1 year it was going up and down and went to highs, and then now we are looking on the extreme right side of it. Everything is going down. Basically, everything is going down, but it doesn't matter. I mean, we take a look at this 2 years chart. So on the long run, although it's going down, it should still be going up further. So don't be worried. I will just take that, this chance of the market going down is giving you a good chance to get the shares that you want at a discounted price. So of course, if you have extra funds and you want to invest, then this can be a very good time. But of course, it doesn't mean that the market will not go down further. So you probably need to keep some more spare cash in case this thing goes down further. But of course, if you can do the dollar cost averaging and keep buying, it will eventually go up higher. Okay, now I'm pulling out this chart from TipRanks. Actually, it's not a chart, it is a prediction, the analysis price target. I'm looking at AliBaba right now. So currently it is going at 83.99. On the left side of the page, you can see it's at 33.99. Not very fortunate of me. I have been buying since 110, but of course I believe there are many people out there who are buying much more than this price. Nevertheless, I've been buying along the way when it's dropping. So basically, I've brought my cost down to 104 if I'm not wrong, but then now it's still 83.99. It's still not very good news. I've intending to add more shares along the way, but we'll see how. And TipRanks, their price target, you see on the right side, their high target is at 276. The average target is at 171.40. Typically speaking, if we just don't be greedy, we look at the average price of 171.40 and my cost of 104, just make it 105. It is relatively a very good investment. Of course, we have to look at low as well, selling $5. So basically, there's still room to go down basis on what they predict. But then again, well, of course, I will still keep more money. I'll keep finding more money to buy. Probably if it really falls to 75, I'll probably add a bigger share lot to this portfolio. Anyway, all these predictions are not definite. It's just what the banks is suggesting, or their analysts are suggesting. So coming up next, what I have here is Palantir. Okay, Palantir is a bit of a pain for a lot of investors. I believe a lot of people bought at the 20s and stuff like that, and actually went down to I think $9 or something like that. I cannot remember exactly. So currently $11.12. My average cost is still $15. Okay, not very good, losing a bit of money, but doesn't matter. I'm still going to add more shares along the way. I have actually sold a put option at $10. I will be happy if the share goes down to $10 or below, so that I will be exercise to get 100 more shares at $10, and that will significantly bring down my cost from $15 to $12.50, I believe, because it's half. 15 and 10 is $12.50, half, because I have 100 Palantir, so I'll add another 100 Palantir on my Tiger Brokers. Of course, I have some worse news on my Momo app itself, which my Palantir cost $16 so basically it's another bleeding event, but never mind. I said I'll try to get more money and buy more along the way. Okay, so let's come up next. What do we have? Apple now is selling at 156.80. Highest target 192.93. Lowest is 161, average 192.93. I would say a bit sad. I think I got a very bad FOMO impulse bought when Apple was going for 197. Yeah, and I think I bought at 197. I don't know whether it can go back to that price. I believe it will, but how long I don't know. But I will still try. 192 is not cheap. I don't have so many 192 to. And I mean now it's 156. I don't have so many 156 to average down my price, but I will still do, because I don't hold a lot of Apple shares, because that time at 197 I bought a bit, not a lot compared to the big players. I'm a small player, so I have a bit. So I will still try to average down the price. Yeah, that's how it goes. So let's see. Coming up next, the favorite mother stocks of everybody, Tesla. Yes. Yesterday was the worst I've ever seen in Tesla movement. Seriously. I was day trading, when it was around 9%, minus 9%, minus 10%. I was doing some trading. I was hoping that the stock would actually rebound back. So instead of shorting, because I thought that it's really so low, how low can it go? It cannot be down further more than 10%. So I was consistently longing, hopefully that it will bounce out. So what happens that it bounces up a bit, it comes down again. Then oh my god, shit! I need to sell, to cut my loss. And then I'm constantly doing this. Buying and then selling at a small loss, or sometimes I buy, then I make a small win, then going up and down. Unfortunately, I had a red on my day trade on Tesla yesterday. But well, okay. I was betting. honestly I was betting. That is why I have never recommend you guys to do day trading. It's always good to do dollar cost average as investment rather than day trading. Day trading can be very dangerous, so please do not day trade unless you have been practicing a lot until you are immune. So immune that you losing money is like, okay, well, it's just another day. Do not trade, do not bet on the money that you cannot afford to lose. That is very important. Hopefully you don't trade on leverage. If you do, you need to be very alert on the movements, because on leverage it can be very dangerous. You might break your bank, your account. So please do not do it until you are very confident, or unless you have a lot of money to lose. So otherwise, go back to the fundamentals of dollar cost averaging, and then I believe that should be the way. Of course, it can be very interesting to day trade, but you need to learn a lot of support and resistance, the trade patterns, and stuff like that before you really get into trading daily. Okay, so basically this is what I have for today. Nothing too much. I'm just sharing on my majority of my portfolios, my bigger portfolios the main stocks that I hold. So hopefully this video helped you with something. Of course, do not take all these predictions as an financial advice. It's just an indicative price which may or may not even happen. So guys, if you like this video, I will appreciate that you can give a thumbs up, subscribe, and then I will see you soon again on the future videos that are upcoming. Invest safe, stay safe, and bye for now.